What's going on, guys, and welcome to closing out our 30th week of investing on our channel, where we invest $50 every Monday through Friday into dividend paying stocks. I apologize for the quality of this video as I am recording on a MacBook in my car. My son has been running amok, and I basically can't record anything in my house right now, so I'm outside in the car. So that's not great, but let's take a look at the portfolio and see what's going on. Oh my God. All right, so here we are in Seeking Alpha. We're just going to go line by line of what's in the portfolio right now and how it's doing. So up front, we have Tesla, TSLY. So we currently have $2,032.48 of that. That's at 119.84 shares, and the price is $16.96. Now, this has been hovering around that $17 price point, which is okay with me. We own it in the mid-16s, and the dividends have been quite good anyway. So, yeah, that's kind of doing its thing. As you can see, this forward dividend yield is at 75%. It's ridiculous. We are overweighted on this though, so we'll probably get rid of some of that sooner rather than later. SCHD. So Charles Schwab's dividend or US dividend ETF, we have $1,563.72 there. This has started to perform pretty well over the past week, which is exciting because it has been pretty down for the past like 3-4 months. We are at 20.68 shares, and the price point is up to $75.63 per share. So again, this is something that we've been buying for like $70, like $69. So it's great to see dollar cost averaging help us out there. And otherwise I don't know how I'd be feeling about that position. But SCHD is a long haul stock. So, if you just buy it every day, it usually works out pretty well. Dividend yield is down to 3.52%. That's because we've seen the price growth in the stock. So of course the forward yield doesn't look as good, but this is a fund that has a history of growing its dividend. In fact, they've grown it for the past 11 years. In the past 5 years, they've grown it by an average of like 15% per year. So again, dollar cost averaging to SCHD, usually pretty good. Realty Income Corporation. This is another one that I am very thankful that we are dollar cost averaging into. So we have $1,489.65. That's 24.23 shares. And you can see here the price is at $61.47. Ultimately, Realty Income Corporation is quite low right now. The forward dividend yield is almost to 5% again. That's generally my benchmark of when it's a good time to buy it. I'm not a wealth manager, credit counselor, financial advisor. I'm just a guy sitting in his car because my kid's running amok. But yeah, I mean, at 5%, like Realty Income's a great buy. They do pay a good dividend every month. They had a month in COVID where they missed one, but aside from that, they've been pretty good for the past eternity. So yeah, I mean, Realty Income Corporation, we're buying that as steal right now. At least I think so. Now, Aptly, this is like Tesla. It's a covered call or a synthetic covered call fund. Sorry. There we go. It's a synthetic covered call fund based on Apple stock. We have $1,163.16 there. That's 51.47 shares, and the price is at $22.60. So here is the love-hate relationship with Aptly. I do have $1,000 in call options on Aptly that I accidentally bought on margin last week. So last week I had a very zen moment where I came to terms with I probably just blew $1,000 on nothing. But now I've only blown $400 on nothing, so that's good. And hopefully Aptly might actually do something. So this call option is to buy buy Aptly at $22 per share. So Considering it's at 22.60 per share, we've made $600 on it. It's just we paid $1,000 for it, so we're down $400. So hopefully this aptly call option works out for us. And there is going to be a big make or break day for Apple because earnings is Friday for Apple. So on Friday, we're going to see an earnings report. A lot of people are split on it. Like half of people think it'll do well, half of people think it'll do poorly. So very, very antsy about that. But if we get good news from Apple, we might accidentally have like a good position here on this Apple call option nonsense. We might break out of this in profit. So we'll see. Fingers crossed for Friday. Hopefully Apple has a good earnings statement, and we'll see what happens from there. JEPQ, so JP Morgan NASDAQ Equity Premium Income ETF, we are at $868.25. So we have 17.58 shares of that, and the price is up to $49.39. So just to kind of skip down to the bottom here, we do have quite a few call options expiring in 3 weeks on JEPQ as well. So we have two of these $49 JEPQ calls. Those are in the money now because of the price increase that we've seen. And then we have two calls here for JEPQ at $50. So I don't think it's a huge reach to think that JEPQ could grow by another dollar or so based on, what JEPQ has in it. So JEPQ is an ETF that sells covered calls on Apple stock, Nvidia stock, Meta stock, Microsoft, Google, Amazon, basically everything that's going through the moon. So if those continue to move in the direction that they are, I think that it is reasonable to assume that we could see a 2 to 3% gain over the next 3 weeks in JEPQ. If that happens, we will have some very, very affordable profit, which is great because these options were pretty cheap. And then I do have a JEPQ $50 call option for November 17th. Same sort of thing. I think it's reasonable to believe that we could see 2 to 3% per month until November. I think that that's reasonable. Just at the rate of growth we've seen, if that is the case, that could be a huge moneymaker for us. And it was really actually quite cheap. So we're in it for the long haul with JEPQ. We're going to see some growth. Hopefully I can take these JEPQ call options and roll them into actually owning more shares of JEPQ. So that's the goal there. Now, into the stocks that we put $5 every day into. MPW, Medical Properties Trust, is leading the way magnificently. It is so fun to say that. But yeah, so the value, we're at $821.69 of total value in our MPW holding. This is our highest performing aspect of our portfolio aside from our options trading. But yes, this is our best return in the portfolio is MPW. We have 81.76 shares and we're over $10. We're at $10.05. It's still paying this $1.16 per share forward dividend. So it still has this nice big juicy dividend. It's 11.54%. And we have 81 shares of it. Dollar cost averaging, buying $5 a day, has really taken care of us with MPW. Now, BlackRock, another one, kind of came out of nowhere, which is awesome, but we have $807.43 of BlackRock. So that's 1.09 shares, and the price point is $738.34. So kind of traced back a little bit from like that 750 number that we were around, but the forward dividend yield has definitely dropped below 3%. We were above 3% for a long time. That's kind of that sweet spot, like I had said with Realty Income Corporation, ticker symbol O. So yeah, we dropped below that threshold of where I'd say like, yeah, that's a great buy, but we're dollar cost averaging in. We own BlackRock very inexpensively, and we are happy to continue to buy it. Procter and Gamble. We are at $800 even. That's really weird. I hate round numbers in a portfolio. It's just bizarre to me unless it's an option. So shares, we have 5.11 shares, and the price of Procter and Gamble through the roof. It's at 156 and 41 cents. This forward dividend yield is back down to its normal 2.4 or 2.41, whatever, same thing. And that is a dividend that has grown for the past 66 years. So hopefully that will continue to grow. But we have a decent chunk of shares now, which feels great. And we are getting paid a dividend in a couple weeks from Procter and Gamble. So that's always nice to see. Pepsi. So Pepsi back up over 190. That brings us to $792.88 per share. We have 4.17 shares, and again, 190 and 31 cents. So great numbers from Pepsi. It's at that 2.66% dividend, which is about normal. They will take their snapshot this month, so we're not going to get paid out a dividend until the end of September, but they are going to pay us based on what we have at the end of this month, or upcoming month, I should say. Years of growth, though, 50 years. So that dividend has increased for the past 50 years every year. JEPI, right? Kind of bringing up the rear. We have JEPI, which is JP Morgan Equity Premium Income ETF. $784.60 there. That's 14.06 shares at $55.82. The dividend has been on the lower side lately with JEPI. I am more a fan of JEPQ personally. At the end of the year, I might start putting more money into JEPQ and kind of flip my approaches between JEPQ and JEPI. Not sure if I'll do that or not, but it is what it is. They have grown their dividend for the past 2 years, though. And year-to-date growth, we are at 2.44%. That was negative for a long time, or just kind of like zero for a long time. But when you're paying a huge dividend, it doesn't really matter if it's trading flat. You're just getting paid a huge dividend. But something that pays a huge dividend and does not trade flat, it is tanking every day, is AT&T. So we have $624.04 of AT&T stock. That's 43.19 shares, and the price is $14.45. So that's definitely not great. The forward dividend yield is up to 7.68%, though. I mean, that's a pretty huge dividend. That's actually pretty crazy. And we are going to get paid that on Tuesday, so we should have a nice, pretty decent payout. And over these next couple of weeks, we should see some pretty large dividend payouts. From the likes of AT&T, Procter and Gamble. We'll have JEPI, JEPQ, Aptly, Tesla, and SCH. No, not SCHD. I almost just lied to you. And Realty Income. So actually, a lot of dividends. Hopefully this is another month where we get paid $150, $200 of dividends. That'd be great, because our portfolio overall is pretty small. We have a balance, or the assets in our portfolio are worth, it says it up at the top, $12,943.91. So that's the total representation of what we have here. And we owe 2,000, just so you can see it down here, $2,516.13 of margin. So that is what we currently owe to SoFi in margin. But again, we are paying SoFi 8.5% for our margin, which is high, but not bad. A lot of the other brokerages are at like 11, 12, 13%. I've seen some pretty high numbers. So I'm okay with 8.5. The thought process behind that are, well, JEPQ pays 8.5. And basically everything that we have on margin is either a long-term call option by accident, or Aptly and Tesla. So if we sell up our Aptly, Tesla, and then, as soon as we get out of this Aptly option, that'll get rid of $1,000 of margin. So then we're really not that extended. Don't text and drive, don't trade and drive. You will accidentally click market order instead of a limit order call option with no other buyers. But that is that's where we're at in the portfolio. And yeah, sorry it's a weird short video, but watch for Apple's earnings. I think they're going to be good. I just think they're going to be good. So we'll watch for Apple's earnings. Hopefully Apple goes through the moon, and then I can sell these options off undervalued and just get out of the margin position that I have on them. With that, I wish you happiness, health, and wealth. Have a good night.